We've got Gaurav Mehta, Vice President Institutional Equities at Ambit Capital, joining us. Gaurav, good morning. Great to have you back on the show. Prashant this side.
Good.
So, Gaurav, is the market a little unclear about, whether it wants to sort of, move on like it did going into the budget? Is there a little more confusion now? You guys at Ambit have been saying that, actually you've been one of the very few who've been openly saying, well, the budget was disappointing. It was a lost chance, lost opportunity. But I just want your view on the market to start out with.
Clearly, the expectations going into this budget were so huge that, whatever the FM could have done would have resulted in a disappointment. So I think those were the high base expectations that we were working with. But the good part is that in spite of that budget not meeting those high expectations, the market is holding up. So you could look at it both ways. Given the high expectations that were already built in, the budget clearly was not to the level that you would have expected it to be. But then at the same time, if markets are still holding up, I think that is a strong enough message that the market is giving. So, clearly people thought that this budget will be the big thing that provides the next impetus to the markets. The budget didn't prove out to be that. But to look at it a little more constructively, the budget did provide, certain small steps which, could help building that base, which eventually, creates room for that big thing to happen sometime in the future. So from that point of view, it wasn't the best budget that you could have hoped for, but at the same time, disappointments were also relatively modest, and from that point of view, I think the markets are taking it relatively well so far.
So we remain in a uptrend, right? And you've been writing, Gaurav, that we are with the initial stages of a long-term uptrend, right, Gaurav?
Yeah, clearly, our view is that this is over the last 3 decades, you have seen 3 waves in India's economic growth, and our view is that this is just the beginning of the 4th wave in India's economic growth. And historically, the initial phases of these economic cycles have been the best periods of market returns. So clearly, from that point of view, we stay very constructive on the markets, not just for a 2-3 year perspective, but even for March 15, our target stands at 30,000. So which suggests that there still is 16-17% kind of an upside to play for, even from the current levels. So clearly, we stay in an uptrend. Obviously, in any uptrend, you will have your own sort of sets of disappointments, which will try to tamper the move, etc. But that is a part of the game, and you have to live with that. So I don't think anything has happened which changes that uptrend. So we still stay in that uptrend. It has been moderated to some extent by the budget, but that doesn't change the direction in any significant fashion.
Okay, and it's an important point that you make. You said the first couple of years of what you call a bull market are the best, right? Of an economic upturn are the best for market returns. What, 60-70% of the gains come in the first couple of years?
Yes, exactly.
So it's those initial 2-3 years are essential to play the market. Yeah.
Yeah, exactly. That's the point. These economic waves last about 10 years on an average, but the best returns, more than 2/3 of all returns, have to be had in the first 3 years itself. Which is because markets are forward-looking, and they tend to discount a lot of what's about to happen in the initial few years itself. And given that after a long time we have had this stable a government, after a long time we have had an RBI governor who's so proactive. So clearly, that discounting process will continue, even though on ground improvements might take a little more time to come through.
Okay, I'm looking at, this is Anindya from the Delhi studio. I'm just looking at the trend line that you've drawn in your latest report. On the 15th, you came out with a report. And the trend line seems to suggest that the highs are now getting lower, while your lows are I'm just looking at the quarterly log chart of the Nifty that you've put up. The highs seem to be getting lower in the immediate term.
No, I mean, I would not think so. I mean, you initially made a high at around 6,700, after which you moved up to around 74, 7,500 after the election results, and then you eventually made a high of around 7,800. So clearly, I mean, you are not sort of forming lower highs. You are in fact continuing to breach previous highs. And sorry?
I'll just rephrase that. If one looks at the trend line, that is the uptrend trend line that you've drawn, if I look at obviously if I look at a horizontal line, the highs have been going up. But if I look at the trend line, then clearly the highs are not hitting the trend upper end of the trend line at all. It's not even hitting your middle trend line at the moment. So it seems to have kind of flattened out.
I mean, yeah, I mean, see, I mean, what you are talking about are, you know, really long-term quarterly log charts. And on that perspective, I mean, from that, I mean, such a long perspective, clearly we know that the last 6 years, I mean, the period from about 2008 peak in January 2008 till about 2013 were a bear phase for Indian equities. So in a bear phase, you would not expect higher highs to be made, and you would in fact sort of consolidate, either go down or consolidate in a time fashion. So clearly that 5-year period was a time-bound consolidation, which eventually, you know, was quite brutal for several stocks. Was you know, from an opportunity cost point of view, from an inflation-adjusted point of view, it was a, you know, brutal bear market for Indian equities. So in such a period, you would obviously not expect the previous highs to be taken out. But the point is that now, eventually, after a 5-year-old consolidation, those previous highs of about 63.50 have been taken out. And you know, that in itself is a very, very sort of strong development from a technical perspective, and that suggests that that 5-6-year-old consolidation is now over, and we are on a path towards a long-term move. Now the lines or the, you know, the higher highs that you're talking about would suggest that the Nifty actually goes to about 13,000-14,000 in a 2 to 3 year time frame. So you know, that's the extent of upside room that's available based on those charts that you are referring to. So, you know, I mean, looks a little outsized an expectation.
And looking at your report,
historically we
you
have
seem to
done
suggest that 74.50 is a strong support. What is the, if it goes through that support, what is the downside that you look at?
Right. Okay, I mean, so first of all, why that 74.50 on the Nifty or correspondingly 25,000 on the Sensex is important is because these were the levels that we had hit after the election results, and for a couple of weeks we had failed to move past these levels. But once we did, over the last 2 weeks, we are finding strong supports around those regions. So from that point of view, clearly they become very important psychological levels. If you do go below those levels, which isn't our base case, but if you do go below those levels, then you know, you could easily be looking at another 5-6% correction on the Nifty. So Nifty going till about 7,000, 7,100 odd would not be that unlikely. You know, I mean, so, you know, very simply put, 74.50 to 7,800 has been the upside range so far. If you project a similar range beyond 74.50, if that level were to break, then you anyways reach a target of something closer to 7,100. So if those important psychological barriers are indeed taken out, then you could see another 5-6% even from those 74.50 or 25,000 levels. But
what about the Bank Nifty, the Bank X and the PSU banks?
And even if that were to happen, I mean, we are very constructive on the index, the Bank Nifty index, and predominantly because, again, it has staged a very long-term breakout. PSU banks, you know, again, is a space that technically looks attractive. From a fundamental standpoint, I think the one bank that we like, especially from that entire universe, is Bank of Baroda, available at about 0.75 price to book. I think that is one bank which clearly is larger of the PSU banks, is relatively better both in terms of its liability side as well as asset side compared to any of the other PSU banking peers, barring SBI. But SBI trades at 1.2x and hence discounts that quality already. But Bank of Baroda at 0.75x we think is a very attractive investment opportunity at this point in time.
I understand that you also have a long call on Bajaj Auto, which has come out with its numbers. They were weak. I'm wondering whether your stand changes after that.
Yeah, I mean, we were surprised by the decline in margins, and I think we are waiting more clarity from a management call. But this is one stock which has had a fabulous track record in terms of, be it ROCE generation, be it cash flow generation, and this is one stock that over the years has continued to deliver shareholder wealth. Technically, after a period of fairly long consolidation over the last couple of years, this stock has finally staged a breakout, and the region around 2080 on the stock is of paramount importance. And our belief is that the stock will not sustain below that 2080 region or that 2080 level for any meaningful period of time. Clearly, from a sentiment point of view, from our interactions with our clients, this seems to be one of the most sort of disguised or most hated large cap stocks. But our view is that with the recovery that we are talking about, the urban motorcycle segment is something that is going to pick up, and that will surely provide cyclical benefit to the entire Bajaj Auto story. Exports continue to ramp up pretty nicely, and given that manufacturing exports is going to be a focus area for the new government, even that augurs well for Bajaj Auto. And thanks to the skepticism that most of the investor community has towards the stock, it is now available at very reasonable levels from a valuation point of view. So we would think these profit surprises, the negative surprise that you saw yesterday, is a good opportunity to be getting into the stock.
All right, Gaurav Mehta, any disclosures that you would like to make? We didn't discuss too many stocks at Bank of Baroda, Bajaj Auto.
We could have recommended these stocks to our clients. I do not hold any of them in my personal capacity.
All right. Thank you so much for joining us, Gaurav Mehta.